India's Life Insurance Corporation is set for the country's biggest ever IPO. The state-owned insurer hopes to raise $8 billion through its market debut and has told regulators that it will sell 5% of its shares. Now, the listing is a key part of the Indian government's pro-market policies. Ishan Garg has more from New Delhi.
With an $8 billion listing, Life Insurance Corporation of India, or LIC's IPO, could be 4 times the country's previous biggest IPO. One of the 5 biggest insurers in the world, it dominates the domestic markets. LIC holds more than 60% of India's life insurance market by premiums and manages more than $500 billion worth of assets. The IPO could fulfill a major part of the government's $10 billion disinvestment plan. Analysts say it's crucial for Prime Minister Narendra Modi's government that has positioned itself as pro-market. This could be why authorities have been preparing for the listing for nearly 2 years now, and there's ample interest in the market already, even as foreign investors have recently been pulling money out of Indian stocks. Part of the reason behind enthusiasm among investors is the company's recent performance. It reported $190 million in profit for the first half of the financial year 21-22. The company's insurance premium from new businesses grew by 5 times in the same period. And with more than 280 million insurance policies in force, analysts expect the revenue figures to improve even further. But there are also concerns that shares of some of the recently listed companies have failed to live up to the hype. Shares of payments company Paytm, which raised more than $2 billion last year in the country's biggest IPO, are now trading 50% below their listing price. But analysts hope things will be different for LIC. It has a broad subscriber base and more than 6 decades in the Indian domestic market, which is why analysts expect this company's IPO to gain substantial interest from institutional as well as retail investors. Ishan Garg, CNA, New Delhi.